headed to work this morning. Let's chat a little bit.
Topic today is not about the strategy. When most people think about what a profitable trader does, what a profitable trader is, characteristics of a profitable trader, if they ask somebody who's a profitable trader, to tell me about it, what most people, including new traders who are just getting into it, myself included, what most people think about is the strategy. Like, open up the charts and let me show you this strategy when A plus B plus C happens, then D is going to be the result. Maybe more specifically, when the price reaches a certain level and I've got a moving average that's doing a certain thing and I've got some other indicator or some other price action signal, an engulfing bar or whatever, when that happens, you enter and you got an 80% chance of winning. You got a really good chance of winning. That is what people, again, myself included for a long time, that's what people assumed trading was all about. It was all about the strategy. And it's not. That is a very small piece of the puzzle. We've talked about it before. A better way to think about it is sitting on a stool. Profitable traders are sitting on a stool. I know a lot of stools have 4 legs, but my stool here for this analogy has 3 legs. So we're sitting on a 3-legged stool, and one of those legs absolutely is the strategy. A lot of folks, and I kind of like it, would refer to that strategy using a different term. They're going to use the term edge. An edge in the market. There's lots and lots and lots and lots and lots of edges in the market that you can pick. You can pick edge based on price action, or you can pick an edge based on a particular indicator that you like. You could pick an edge just based on times. For example, let's say the New York Stock Exchange, a lot of mornings at 10 a.m., so 30 minutes after the New York opens at 9:30, there's a reversal, and that is a real thing. So you could have an edge where you just sit there and you watch the first 30 minutes, and at 10 a.m. you recognize whether or not it looks like the reversal is going to play out today. So I just throw that out there to illustrate that the edge can be anything, and they all work. What do I mean by they all work? They don't all work. They don't all work at the same time, because they're always they conflict. Edges conflict with each other. So on the one hand, you might say, how does that work? How can I have one edge? Let me give you a specific example. Let's say the market's moving in a particular direction, up or down, it doesn't matter. Up, because it's easier to think about. So you might have an edge that says when the market is moving upward in a nice trending fashion, it's moving up, then you get in a trade.
'Cause you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in a trade. 'Cause you get in a trade, you get in
And so that's your edge. When it's going up, I want to jump on and go up with it. If you do that, that is absolutely an edge. However, when you're looking at a chart that's going up, if you notice, let's say a key price, and within the last week, when it got to that price, it rejected off of it. So if it was going up, when it got to that price point, it reversed and it went down. It bounced off of it. So that is a completely different edge. That edge is, hey, last time it got to this price point, it rejected off of it and reversed. You can play that edge. You can not be in a trade. You're not looking for a trending market. All you're doing is looking for price points that have had a rejection at it in the past, and your edge is, hey, I think there's a decent chance when it gets back to this price, it's going to reject again. So you wait and wait and wait, and when it gets to that price, you jump in, assuming it's going to reject. Perfectly good edge. So those are two different, unrelated edges that are in conflict with each other, or could be at the same time. If they're two traders sitting next to each other, and one of them is a trend following trader and the other one is a reversal trader at key resistance levels, they could look at the exact same chart and say it's going up, I'm going to get in, or it's going to reverse off of that and I'm going to get in for a short trade. That's just two strategies or two edges, and a good way to think about how them are in conflict with each other. And there are a innumerable amount, tons and tons and tons and tons of edges and strategies. You can build an edge around indicators, and there's thousands of indicators. So just imagine, you've got a strategy built on 2 or 3 indicators, and the next guy has a strategy based on 3 different indicators, and they're not going to agree with each other. A lot of times they're in direct conflict. Another example, you can take you can take an edge, and whatever chart you're looking at, when you change the time frame of the chart, let's say you go from a 5-minute chart to a 1-hour chart. You're looking at 5-minute candles versus 1-hour candles. Everything changes. The exact same instrument, let's say you're trading a stock, Tesla stock, or you're trading the NAS 100 or some other index. When you change the time frame that you're looking at, whether it's a good time to get in or a bad time to get in is going to change. So that's just another level, another example of how the edges are typically always going to be different edges are going to be in conflict with each other. So with regards to the strategy and with regards to the edge, you have to pick one. And you have to understand they are in conflict with each other as you look at different things. Once you understand that that's the reality we as traders live in, you're one step in the correct direction, in that you understand, hey, all of these things work. They all work. Just pick one. You get into trouble when you get in one, but let's say 2, 3, 4, 5, 10 different strategies or edges, or when you get into a trade and then you see, let's say, the opposite edge setting up, or a different edge, or a conflicting edge setting up, you're already in a trade and you're like, oh crap, I think it might do the opposite of what I just thought it was going to do. That is so hard to mentally be in that state of mind of flip-flopping and wishy-washy, and so it's kind of a long-winded rant on one of the legs of the stool, i.e. the strategy or the edge. And in short, you need to pick one that suits your personality, suits the amount of time you want to spend on the markets, that suits your impulsivity, your need for feedback. And as you look at initially, as you look at strategies and time frames and ways to get in, and there's going to be so many different choices and options for finding a edge. Remember, they all work. You're finding an edge that's suitable for you. And here's an example. Now, I don't want to be on the charts a lot. Not because I don't love it. I do love it. But I know I love it so much, and I'm so addicted to it, and so addicted to the thrill of the chase, the dopamine release you get from just entering a trade. When you enter a trade knowing there's a chance you could win money or lose money, either one, there's a dopamine release. That, I have learned, is not good for me. So the more time I sit there and sit there and sit there and sit there, the more opportunities I have to mess it up, to do stupid stuff. So I want to trade, as much as I love it, I want to trade as little as possible. So I'm going to pick an edge that allows me to trade very little. And you might say, what are you talking about? Well, two ways to do that. Some people will get on a longer time frame chart, like a 1 hour or a 4 hour chart, and they have a setup that they're waiting for. But on a 1 hour or a 4 hour chart, you would have to sit there all day, and the next day, and the next day, and the next day, or whatever. You might have to sit there for days and watch this thing, waiting for your confluences to align and for your setup, and then you get in. That's not cool. I don't want to be on the chart all day, multiple. I can't do that. I don't want to do that. I can't do that. So how you get around that is you look at the chart and you would set a alert. Set an alert on your indicator, set an alert on your trend, set an alert on a price point, set an alert for whatever your setup is, and then go about your day, go about your week. And when your phone goes bing, then you get out your laptop or your phone and you look at it and like, yep, there it is. That's what I'm looking for. And you get in. So that's a way for you to trade on a longer, trade on a higher time frame chart without sitting there all day, without sitting there hardly at all. I like it. I don't particularly want to do that. Not that that's bad. It's probably, hell, maybe better than what I'm doing. But what I've done is I've chosen a very short, a very low time frame, a 5 minute chart or a 1 minute chart. So itty bitty, tiny little time frame. And I have committed to sit there and look at it for 30 minutes. So I'm not trading all day long. I'm trading for 30 minutes, if that, 15 minutes. And in that 15 minutes, because I'm trading such a small time frame, let's say a 1 minute chart, there's a lot of up down movement. There's a lot going on in that 15 minutes. So it's possible, I don't necessarily say likely, it's very possible that my particular edge that I've picked, my setup, my confluences will happen it'll probably happen once or twice over the course of a week. So Monday through Friday, I'm going to open up my chart and I'm going to look at it from 9:30 to 10. I'm going to sit there and stare at it from 9:30 to 10 and watch these 1 minute candles form. And if all of my confluences, all of my edge components line up, then I'm going to enter it. And then, what you do then is important. That's probably a long conversation for another day, because I'm almost to work here, so I'm going to wrap this up. Maybe we'll talk about that next piece. All right, so what happens then? So far, all we've done is address one leg of the stool, the edge, the strategy leg of the stool. So to summarize, they all work. You just need to pick one. Don't try to pick one simply based on a win rate. This one's got a 70% win rate, 80%. That's all bullshit. That is all bullshit. Don't pick a strategy, an edge, based on some win rate you saw online. You pick an edge based on you and your personality, the amount of time you have available, how impulsive or not impulsive you are, how patient you are. Pick one that is very, very, very simple. We as people in America, traders, men in particular, but apply to women as well, we want to find something that's complicated. That way we can be proud of it and show our friends. And when you explain it to somebody, it's friggin' complicated and we look smart. All of that is garbage. You need to pick a very simple edge. Trust me, the simpler, the better. And it's not, the more confluences and indicators and things you put into your edge, the harder it's going to be, because because the confluences a lot of times, as we discussed earlier, are in conflict with each other. But if you only have one confluence, there's nothing to be in conflict with the other one. So it's easier. Whenever I get this one confluence, I get in. And so anyway, I know I'm kind of jumping around a little bit and going back to beat a horse that we already talked about. But I'm pulling into work here, so just to summarize,